Guys, this is Rudy coming at you live from Palm Beach in Florida. It is Thursday. It is June the 6th. The year is just flying by. I want to take a few minutes just to talk about Devon. I'm sure quite a number of us are invested in Devon Energy. I am. I have a long position in Devon. It's one of my larger long positions. It's not the biggest by far, but I certainly have quite a significant long position in Devon Energy. So what I want to do is take a few minutes and just sort of work through a little, let's call it a fact file on Devon Energy and see where it's going and what it is that they are doing. So the question that I'm posing here is how Devon Energy missed out on the US oil and gas mega deal wave, or did they, right? So let's explore that one a little bit more detail and see what happens. So on June the 6th, that's today, Reuters reported, and this is according to, well, I'll give you the scoop on where this comes from in just a minute. Devon Energy has lost bids to acquire at least 3 of its peers in the last 12 months because its shares were spurned as acquisition currency. So what they mean by that is to say that most of these deals are done as stock deals, and because Devon Energy stock is trading so low, the acquisition currency, if it's going to be stock, is not very, very good or very attractive. A couple of examples here. They lost a $22 billion deal that was to acquire Marathon Oil. They lost that to ConocoPhillips. Occidental Petroleum recently spent $12 billion to acquire Crown Rock. Enerplus sale to Port Energy was $3.8 billion, according to Reuters sources who are usually obviously anonymous. So Arathi Somasekar reports for Thomson Reuters and says that Devon has turned or had turned deal-making to gain scale as it drills more of its existing acreage. It struggled to clinch an acquisition as higher drilling costs and production issues made its stock less attractive to acquisition targets. Most recent big deals in the sector, including Exxon's $59.5 billion acquisition of Pioneer Natural Resources and Chevron's $53 billion agreement for Hess, have been all stock, right? So this is a bit of a challenge because Devon's stock is under pressure and has not been performing well at all. And if you're long, you would know that because it's in your portfolio. All stock offers help to reconcile price disagreements with acquisition targets. Sometimes the shareholders are reluctant to cash out for fear of energy prices may sharply rebound, but they're happy to roll their stakes into a deal because they want to stay invested in the combined company, which generally, with the exception of a few deals, of the past few years, if you think of Occidental acquiring Anadarko, it wasn't so much that it was a bad deal. It was just the timing that was bad because after that, energy futures crashed, right? So if the price of energy had sort of remained where it was in 2019 going into 2020, the deal probably would have been okay, right? But as a general rule, the shareholders are quite happy to stay invested in the combined company. Very, very seldom that they actually just sell out their position. Acquisition targets are skeptical, however, about the value of Devon stock that has underperformed the S&P 500 by 16 percentage points in the last 12 months. That is not a very good return. Let's look at it on a graph here. So if you look at Devon Energy, right here at the bottom, the blue line, comparing it to crude prices over the past 1 year, and then the S&P Energy Index, you can see Devon has been a significant underperformer, and it kind of, this dislocation happened here sort of in April of a year ago. So we have had just over a year, about 14, 15 months or so, where Devon has just pulled back sharply while the energy market has pretty much been okay for the most part, regardless of the fact that energy prices pulled back a bit. Arathi adds, Devon's failure to bag a deal is also a function of its price discipline as an acquirer. Well, this is actually like a little bit of a bonus round here because Devon's discipline as an acquirer is something you can view positively, optimistically, if you would, because they're not just jumping into any deal. Of course, there's a lot of competition for there's a lot of competition for assets in the sector anyway, but some of the companies that Devon failed to buy were quite pricey. So the example that Arathi is sharing here is that Marathon Oil and Enerplus sold for a premium price above previous similar acquisition prices. If you kind of average them out, it's single digits, but the acquisition prices for Marathon Oil and Enerplus have been at a premium of about 3 to 5% above the sort of traditional uptick that you get when there's a bid for one of these companies. Some people feel like when one company does a deal, their competitor just needs to do a deal as well. But smart companies like Devon judge every transaction on its merit. merits, said Kevin McCurdy from Pickering Energy Partners. I agree with Kevin on this one. You cannot just jump in and say, I have to do a deal because everyone else is doing a deal. So where is Devon today? I think at a price of around $47, Devon is a steal. It's a buy here. Even if it pulls back to $40, $41, $42 or so, it'd still be a good deal. It hasn't been performing well, but sort of taking a step back and looking at a big picture, it's only down 3.2% for the year, which is easily covered just by its dividends that it's paying out to investors. So in reality, if you were long in Devon at the current price of around $47, you're not down 3%, you're actually positive if you factor in the dividend. And if you reinvest your dividends, you've been buying more stock at the lower prices. Just a year ago or so, we saw Devon at around $54, $55, and that is actually, realistically speaking, where it should be trading right now in terms of fair value. I'll tell you more about that in just a second. It's undervalued in terms of where it is right now. It's certainly cheap in terms of the typical benchmark. So from a PE ratio point of view, it's at below 9. It's looking good at the current price. Looks like a buy, right? There's the forward dividend and the yield. Currently yielding approximately 4.4%. It's not bad. So once again, as I mentioned, if you take the negative 3% and the positive 4% over a 1-year period, you're actually up slightly or at least flat, right? So it's not that bad. Simply Wall Street says the estimated fair value is about $52. I think that's a little bit conservative, but it's reasonable. DCF is a discounted cash flow model. These things are challenging because you have to make so many assumptions, but it's a commonly used model, and it's probably one of the better ones that we have. So if you're going to use a model to try and predict what the fair value is of a share, you may as well use discounted cash flow. 2 stages, so there are a variety of different ways that you can calculate a discounted cash flow. The best way from my point of view is to look at the free cash flow and compare it to equity and see what the return on equity is and then work back from there. Devon's price currently $46.82, so around $47, indicates that it's trading below similar levels and certainly below its fair value. So if you were to get into Devon now, assuming it's not going to pull back too sharply and there's a better buying opportunity for you, but if you get in at $46, $47, and it does move to simply Wall Street's fair value estimate of about $52, then you're already up 12, 13% or so. The overall analyst target, so if you look at something like tip ranks, where they sort of take or present a repository of all the analysts that are covering the stock and give you that average, the average price target for the analyst is $58.71. That's even 11% above simply Wall Street's fair value estimate. So there is some potential here for stock appreciation on the stock price, in addition to the 4% or so dividend yield. Morningstar is one of the sort of detailed analysts that I like and that I trust. They have a fair value estimate of about $56, so it's kind of sort of in line with the average from people like TipRanks. It's a 4-star rated stock for Morningstar. You can see this brown area here is where Devon was pretty much overvalued. Starting early 2021, it certainly spiked into the $70 range, which was really high. But since then, it's been pretty much undervalued for most of 2023 and year to date in terms of where we are today. The stock is undervalued. If you follow the smart people, not me, then you'll quickly see that Devon looks to be a buy at the current price of around $47 or so. So Josh here from Morningstar says, what do the bears say? So the bears are saying that after incorporating some costs from a whole variety of different things, leasehold acquisitions, exploration, infrastructure, etc., the capital base inflates to a level that could threaten excess returns. Now, this doesn't directly necessarily impact the stock price, but of course, when you start threatening excess returns, it looks negative, so it could have downward pressure on the stock. But I think we're pretty much near the bottom, sort of in the 40s and low 40s or so. So I don't see it dipping too far lower than that. Premium profitability cannot be matched in other parts of its portfolio. Well, that's kind of like a bit of 2 sides of the same coin, right? So the premium profitability has been exceptionally good, and the rest of the portfolio has been less good, right? So fortunately, they have good permits in the Permian basin, so it's very profitable and it's good. Production growth could periodically outpace midstream capacity. additions in the Permian Basin, which creates bottlenecks like Devon experienced in the first half of 2023. I think they're sort of beyond that now, so it should be okay. It's in the past. So Josh also adds, what do the bulls say, right? So ideally located acreage in the core portions of the basins to operate in it offers attractive acreage and that translates to above average well performance and peer leading supply costs, right? Above average well performance, so from a production and revenue point of view, it's pretty good. And peer leading supply costs, which is effectively, you can argue, lower than most of their peers' costs. Shareholder friendly capital allocation for sure, right? Substantial shareholder returns via the base plus variable dividend. The variable portion is related to the free cash flow and opportunistic buybacks. They have been buying back. They cap growth at approximately 5% annually, and thereby they avoid the risk of overspending during up cycles, which is a common fault of many upstream firms. So I'm trying to give you a sort of unbiased view here because I'm not necessarily arguing one way or the other, but certainly when I look at the bigger picture, for me, Devon is a buy. I know quite a number of people who follow this channel have Devon in their portfolios, and I'm assuming that a few of the people, if you're still watching right now, are probably long Devon and are wondering what's going on with Devon. Well, you know, the stock price is not always indicative of where the company is going in the future, where the market is going in the future, where the energy futures are going in the future. And I'm quite comfortable just holding on to my long position. You would know if you've been following the channel that my typical holding period for when I go long is approximately 3 to 5 years or so. I've been in Devon now for approximately 18 months, so it's still early for me. I'm quite happy to hold it and just to see where it goes. It's one of the stocks in my energy portfolio. It's actually one of 10, you know, so it's not like I'm heavily weighted or concentrated in my Devon position. But it's a good company. It's exceptionally well managed by CEO McCreef. And, you know, I think I don't want to punt the stock because there's no reason for me to do that. And you should certainly do your own due diligence. But I think Devon, for me, at 46, 47 bucks is a buy. But I'm more interested to know what you guys think. So you tell me in the comments and we can chat a little bit about Devon and anything else that you think might be interesting or even a better buy than Devon Energy. Thanks for watching. Talk to you soon. Bye-bye.